So today we're joined by Caroline Gray of Treefera. How are you doing, Caroline?
Very well, thank you, Jake. Very happy. It's Friday, it's been a good week, so all good.
Great. Yeah, no, so thank you for joining us. I guess to start us off, could you walk us through your background and Treefera's mission statement and the learnings that you've taken from your journey that are genuinely transferable to insurance?
Yeah, absolutely. So my background, I've been in sales now for quite a long time, although I came to sales probably in a later, or go to market in a later life at the grand old age of 32. I've got 20 years plus experience in sort of enterprise growth, global operations, leading sort of sales, solutions, customer success. I currently am operating in Treefera. I'm both a co-founder and look after all of the go-to-market motions. But prior to that, my previous role was the Chief Customer Officer at UiPath, sort of really helping the company steer through global expansion, from very early beginnings of a robotic software company to then publicly listing on the NASDAQ in 2021, which was a good and fun experience. I currently, as I say, my role in Treefera is all about setting the direction of Treefera from a commercial point of view and lead sort of the customer strategy around how we approach our enterprise clients and ensuring that we sort of can provide defensible data and look after our clients in the way that they would expect and deserve to be looked after. So really enjoying this role. I work with Jonathan Horn, who is the founder of Treefera, and his background is also relevant to this conversation because he comes from heading up global risk and AI at JP Morgan, and prior to that, Citi. So he's very much in the financial services space. And from a Treefera point of view, we're really all about a AI native data product platform that we make the first mile of commodities, so any soft and ag commodities, absolutely legible, and we serve up insightful data that can give companies like insurers, actuaries, traders, financial services and supply chains really good signals in advance of the market for them to make both tactical decisions around trades, but also strategic decisions around products to market and also assuring their investment or asset class.
Awesome, thank you. So I guess it's about the right data at the right time to be able to inform decisions. And could you maybe give an example of some of the data points or some of the spheres in which you operate from a data perspective?
Yeah, absolutely. I mean, in the insurance space, so our whole thing, we're all about sort of providing discoverable, transparent and trustworthy insights to our customers. From an insurance point of view, insurers tend to use the Treefera data. So we work with companies like Kita. They tend to use it really for them to be able to price the asset, so price their insurance product. I mean, this technology is very progressive, so it's really opened up markets for insurance in being able to have much more certainty around how they can price the cost of that insurance scheme, and then also work with Treefera to then monitor that asset, so therefore provide their customers with any helpful prompts and proactive actions that they may need to make in order to preserve and restore and keep that asset in good shape. But also then if a claim is being made, we then provide the data to help provide information on being able to check that that claim is valid and the right insurance product is paid out and so on. So we do it for things like that. Then we also work with customers that are hedge funds or companies like banks like JP Morgan. And we provide them with sort of obviously financial grade data that then they use to make, it could be investment decisions on sourcing particular assets in the agri-forestry space, but also to make trading decisions and to look at their balance sheet. So we have a number of banks utilising us for when they provide a loan, for example, a loan product, they will use Treefera to check the value of that asset and how secure that asset is when they're pricing their loans.
Understood. And a couple of things you mentioned there, that we're at an interesting point in that obviously technology is evolving at such a rapid rate. So opportunities are growing. The dynamic of the industry is changing. But I think as well, we're just generating more of an understanding of how data should interplay to create real insight. And I'm looking forward to exploring some of that in this conversation with you. So when we look at the current landscape of risk data, we see multiple forces that are influencing what's possible through technology. So could you explain your view on some of those factors that are converging and how they're changing the accuracy and speed with which carriers can process and price complex risks at scale?
Yeah, I love this question because I definitely, having been in technology for quite a long time and, was part of one of the fastest growing technology companies for a while. And that, if I look I left UiPath at sort of the early 2022. And if I look at the technology that we were operating on then versus technology now, the landscape has changed so much. And, I think it's quite hard to even imagine the speed and acceleration that these things are, which I think, has its pros and cons, but I'm super excited by it. So factors that have enabled technologies and companies like Treefera to grow are a combination of things. So satellite coverage, I think we still believe satellites, the ability that satellites have and what they do is really underestimated actually on a global scale at the moment. When we launched Treefera, we initially thought about investing and buying our own satellite. And then we looked and realized actually you're going from 3 years ago where they were launching 400 satellites to now they're like over 5,000 satellites a year being launched. So therefore the coverage that satellite technology has really is game-changing and enables us to now get to a commodity level to distinguish the difference between a wheat, corn, soy, cocoa, coffee, which has not been done before. The other thing is ground truth. So things like, we have a range of customers, as I said, in both financial services and also in carbon customers, but also in supply chains. And obviously data sovereignty is absolutely key and critical that we maintain that and respect that sort of very much. But what it does, a number of our clients have allowed us to calibrate and train our models. So that really has, and it means all the customers benefit from better accuracy and better data through the insights that we provide. AI capability, no one needs to talk too much about that. I think everyone's using it now on a daily basis. And one of the things we pride ourselves is that we have also created our own models, but in a way that we've done that very frugally. And what that means is it would be ridiculous to be called Treefera and crunch on more data and use more energy than actually what the benefits of these crops and stuff provide us from a food supply chain point of view. So all of those things are really good things. Then, of course, the scientific stack. We're about 40% of our employee base is actually PhD scientists. We're not changing the science. We are utilising science. But the big thing that Treefera we've done well and done at scale is engineered this science at scale. So having that within the technology stack really provides sort of a major force with giving large companies trustworthy data sets and data insights that really provides a plus. And then finally, like distribution, like in yourselves, like Citora, obviously we're working together. And I think the partnership is really, really key and super interesting for the fact, you understand the importance, you're providing a service to your customers, and therefore us collaborating and Citora being able to ingest this type of data is a really powerful thing as well as scaling. So there's definitely a combination of things that make up the ability to bring this progression around.
Absolutely, yeah. And all of that resonates. It's, I guess, from top to bottom, the AI is the talk everywhere, isn't it? But I guess we take for granted hardware developments, and not just hardware, but processes that are allowing, as you say, that exponential increase of satellites to be launched. It's in the private sector now, which is, it's been going there for 10 years, but seeing it operationally is pretty impressive. So I guess the amount of data that we're going to be able to pull from those kind of methodologies is only going to grow.
Yeah, exactly. Spot on. It really is. It's just going to, we've seen how quickly we've adopted. we've been from the start an AI native. Obviously, Jonathan's background is in AI. He's been dealing with models for a very, very long time. But, now how we're all using it, how we're using it in go-to-market, is quite game-changing of how quick and fast we can turn things around. Now, there's some things about that. You always need to keep a check on the quality. You need to keep a check on that it's staying true to the culture that we're trying to do. But it really is super impressive about how, what it's enabling us to do.
Mm-hmm. Yeah, and on the quality, there's you mentioned something that's a conversation I've been hearing more and more recently, and it's a bit of a challenging one to approach, but the idea of feedback from clients, so from insurers to data providers to validate and kind of further ensure the sovereignty of data and ensure that any data that has been touched by an LLM is going to be able to kind of be trained to become more accurate in the future. I guess there's no question or point there. It's just that there's a massive benefit to that symbiotic relationship, but there's also a lot of obstacles in the way. So it's probably a good time to start thinking about how to address those obstacles to support that relationship.
Exactly. I 100% agree.
Great. So I want to talk a little bit about the opportunity then. So how does growing climate volatility and geopolitical factors, those things are shaking up global supply chains. How does that represent an opportunity for insurance to think about new applications for such data to better understand and underwrite risks?
Yeah. I think the big thing is, obviously, sadly, this volatility is, we've just been at a conference this week and we were kind of, in a very good way overrun with people in the sense of noticing, they're all looking for risk data, risk intelligence on these various commodities, which previously has not been, they've had to rely on ground truth, they've had to rely on, waiting sometimes 12, 18 months, which obviously then they can't do forward planning or make decisions. The facts speak for themselves. So, we've got a huge over-reliance on a handful of countries. 42% of the cocoa crop is produced in Côte d'Ivoire, 31% of coffee is in Brazil. And obviously these countries are going through and they're putting their own regulation in. But there's things that, it's both over harvesting, but also weather and climate and phenology is causing a huge amount of disruption. The UK alone, self-sufficiency, as we know, the wheat fell from 92% to 68% in 1 year in 2024. And all of the forecasting says that is a trend that sadly is going to continue. So I think first off, the facts speak for themselves that this is something that's happening. I think the good thing now is that we can now solve, we can be part of the puzzle. I never ever say, we can do everything. And I think it takes a great many of us to do the right things and help, bring the flow of capital to the right places. So specifically from insurance, what I see is there's a number of areas that we're seeing the applications have a part to play in. So firstly, underwriting, this move from regional proxies to actually plot level pricing, we can now provide advanced forecast as well as near-time updates on yield or real-time updates on yield, flood, wind, fire, drought, exactly at the farm level or agri level. So from an insurer, I know the feedback we've had from other insurance companies, they haven't been able to provide products on this space before. And also historically, let's face it, there's been a low, there hasn't been as much risk in this space. We see it from the banks that, they now get defaults in this space that they never used to have. Because of these different things that are happening. So one, that's a new revenue stream for insurance in the underwriting space, but it also means the underwriting, can be done in a managed risk way, which is great. Then there's also portfolio risk. So we can provide things on like the baseline plus delta. We were talking to a customer yesterday, and then about applying that. Treefera provides modelling or scenario level basis or scenario planning on things like the SP1, the 2.6 and so on, and right through and then sort of over up to 50-year snapshots. Now, obviously, as you go out on a longer term basis, there is a level of which we give a level of comprehension where you're going to get less accuracy. But the fact that this can now be modelled, taking in climate, yield, risk, production, as well as then phenology, really gives insurers, again, an additional revenue stream and where they can launch additional products. And then finally, I know we touched on this before, is like the claims and the parametric design. Treefera can help provide insurers with the triggers that can be calibrated to the biological windows. So we can provide, pre-season, like we provide to a number of companies where we actually give them, predictions on better harvest days or better planting days, so that they can actually now, balance against the risk and their crops being more resilient. So again, all of these things are providing new instruments for insurer that I think are a useful go-to-market, which can provide the insurers with both a margin and revenue play. So I think there's a lot of good opportunity in this space.
Yeah, 100%. And I mean, that last point is super interesting. So I've had a few conversations recently with probably largely cyber type data providers, but then also climate data, talking about we can be more proactive than we are. But the example you gave is kind of interestingly distinct. In the world of cyber, it's we've detected a vulnerability, share that with the insured so they can patch and account for that. And then in the world of climate, it's X kind of weather or climate event is coming, batten down the hatches, protect everything, etc. But when it comes to farming, knowing when to harvest or when to kind of, even when to plant based on the projected harvest, like it seems, I mean, it really demonstrates the kind of unimagined value that AI can bring.
Exactly. And I mean, we've really seen it. And obviously, like these are very serious financial decisions that, people are making, whether you're in a small holding farm, a larger farm, a conglomerate, a large supply chain business or a financial system. We take it very, very seriously. And I think our background in financial services really helps and has helped us architect our platform in a way that, that is different, but brings this extra, the granularity, like we mentioned it, we touched on a little bit around granularity of data. Data can, it's only as good as the insight it provides. And, there's always the old adage, isn't it, of rubbish in, rubbish out. So I think the point that what we really invested in and have taken very, very seriously is the attachment and really making the tech very good at recognizing what these crops are, understanding those patterns. We're very fortunate to have a lot of experts that have been part of the building the models and calibrating them to really understand the differences in these harvest windows, because the whole thing is it's the difference between whether people all the way up the food chain, whether people make money or lose money. If you have too much yield, if you have too little yield, like there are always good and bad scenarios from those things. So this granularity, I think, really works as a growth lever and helps prevent and balance out or manage the risk around any losses incurred. So, we find it super interesting and it has a good contribution to our customers.
Yeah, for sure. And I wanted to ask you about that, actually, when it comes to the granularity and something else that you mentioned in that data is only as good as the insight that it produces. So what we see frequently is that the industry often struggles to strike a balance between having an overwhelming volume of data versus losing context to really siloed data. So you're kind of losing the interplay between data, maybe even reducing things to a score that is kind of, it's efficient, but all the context realistically is gone. So how should insurers approach this dichotomy to ensure that they're getting full value from complementary data points, but without operationally overwhelming themselves?
Yeah, I think what we've done, and again, it comes from, I think, steeped in, I suppose, the background of, Jonathan and I as founders and also our founding team. What we've looked at, because each of our customers has it, even in the same industries, some of our customers exactly just say, just want to see the insight. They just want to see what's the direction of this going into. But then others, data scientists or actuaries want to see absolutely every single row and cell of data. So what we've done is we've pitched it towards where we have, with the Treefera data enablement, what we do is fundamentally everything is very granular. So we start with, recording information at a plot level, and understanding what is within that. And then what we do, and people can download those files from the platform, and if they want to, they can also incorporate them via API into their own models and really take the time to go through. But then we provide sort of a next level up that has a bit of data in the context of what a business decision or a use case may be. And then we provide the highest level, which is really sort of a high level, probably more an exec summary of this is, the direction. And I think for us, that's probably been, it's worked out as a very good formula because it's enabled, and again, it's, I suppose, stemmed in the fact of trustworthy data. It's enabled our customers to operate at the different levels they need to operate at. So, they can get a leader can get their teams to go and look and check that they're happy with it and it's compared, but also feel confident that they have something ready-made that's insightful that can help them make a decision at speed. And I think that's the thing. That's what I've learned with data. There is so much data everywhere. You can get, and AI has both been a part to help that, but probably also makes it quite difficult as well to, excuse the pun, but see the wood for the trees around things. But I think that's, structuring it in that way, we're finding is definitely the right way to go. So that it responds to, all the different requirements, really, and granularity that people need.
Mm-hmm. It feels like a part of that is almost reframing the view on companies like yourselves from insurers. Instead of viewing you as data providers, it's insight providers, allowing you guys to do what you do best. Because obviously it's more scalable. That the insights you guys generate is going to be it's going to be able to be utilized by many different companies. Whereas if they try and do that in-house, they've just got a mountain of data and a kind of, I guess, a sprawling team that then need to interpret that and turn it into something useful.
Yeah, no, exactly. And I think that's where we, I suppose one of the nice compliments we get from our customers is they always say to us when we send, a test or when they send, they might see a sample, they always, working with us, I think they really like how organized the data is. And I think, and Jonathan, actually, to quote him, when he was at JP Morgan, I think one of the things that he, that really planted the idea of Treefera was seeing this technology emerge. But also he said, ultimately what they wanted is they want the signals and they want the data in an organized way to be able to make a regulated financial decision that has a big impact on the organization. And what they had to spend time doing is wrangling with the data. So what we've done is come from that space where we said, okay, we want to make it very easy for our customers to interact and utilize the data, and therefore so that they can focus on their, strategic additions of building their revenue streams, and, being able to make decisions that impact their business from a bottom and top line point of view. And I think also for us, we just, we can see the pace that this is moving at, really. So I think also, we do, of course, we see some customers, and even a few weeks ago, we had a customer that said, actually, we're going to try and build it ourselves. And that's happened a couple of times over the time. And then they kind of come back to us eventually because, it's like anything, isn't it? We all have to focus on our core business. People sometimes say to us, oh, it's amazing. Are you going to go upstream and start doing workflow? And I'm like, no, we just keep doing. We are the data provider on first mile commodities. That's absolutely what we do. So, yeah.
Yeah, absolutely. And the buy versus build conversation is always an interesting one. And it has been for many years, really. The view that we generally take on it is buy to build. I don't think they're mutually exclusive. You don't have to buy a single solution that does everything, and you don't have to build from scratch, but you can buy the components to then assemble them into something that works for your specific use case. And that's generally the view we take. And it sounds like it's similar for you.
Yeah, completely. And I think also, I think it's really important I'm a great believer in long-term relationships as well. And I come from sort of a services background, a consulting background initially, and then moved into obviously industry and then technology. And what I think is really important is the learners have build trustworthy relationships with people. And I think having, starting somewhere, and people might come to us and have one commodity very quickly, if I'm honest, they'll expand in others. But it's the same also with our solution tool set. We sell market intelligence, risk intelligence, environmental intelligence, and some clients might buy from one solution, they might buy all three. And that's just a pattern. And I think that's, I think it's just important, isn't it, for people to get trust and see the benefit and the value that a tool or data can provide. And I think then all good things follow after that, frankly, on expansion.
Totally agreed. I think in the age of AI, we're at that point in the hype curve where there's so much hype on AI that the value of human relationships is probably a little bit taken for granted. But I do agree and believe that we'll see that coming back, because it's all well and good having a great tool that's LLM driven and does everything you need to on paper, but there's also the aspect of the person that you spoke to when buying that tool needs to understand what you need and then communicate it with their delivery teams, work with you in a kind of ongoing way to help that grow. So yeah, there's a huge amount of value there that may be a little underappreciated at the minute, but I think that's going to kind of come back into play in coming years.
Yeah, no, I completely agree with that. And I think, and it's understandable, right, isn't it? I mean, different people have different, time windows. And also, I think, and I've seen this time and time again with the technology companies I've been involved with, this is a very, very progressive technology. So, we've learned, take time to explain to people how it works so people can understand, because it's sometimes people don't even know the art of the possible, and that's completely understandable because they've got other things to do in their day job. So I think there's just there's a journey that people come on, and it's always goes at different speeds. It just feels like it's going faster right now than other journeys. Yeah.
No, it certainly does. It feels like it's accelerating exponentially. But I guess that's exciting as well as a little intimidating.
Super exciting. So, and I always say to people, there's the power of not missing out, isn't there? I mean, I think it's really important to understand that when these things are going at pace, it's almost, some of our clients really get that you think you just don't want to be left behind, and that is something that we see happening in all, across different businesses, different industries, and so on.
Yeah. I mean, it's super valid, I think, because we're at an inflection point where it's adapt or don't, and those that kind of leverage this technology now, they're going to really reap the benefits early on, which will just grow the gap and the rate of gap growth, I think, between them and competitors. On speed of data, because you mentioned a few things earlier that I wanted to ask you about, and we've diverged a little bit, still relevant, but I just wanted to ask you about speed of data. That's historically been a major friction point. Information is often manually collected by the insurer or received after it's useful. Could you paint a picture of the difference between some of the legacy and maybe more unconventional methods that have been historically used by underwriters or those in the finance industry to assess ground level conditions versus the shift that we're currently looking at to near-time data?
Yeah, absolutely. And I've quite enjoyed this myself, this journey, because what I noticed, so obviously there is the, normal process. A lot of people have got ground teams. So the bigger companies, and both in insurers, hedge funds, banks, and supply chains have people on the ground, employees on the ground that collect ground truth. That's their job. And they will be agronomists, experts in different crops and so on. Others use third parties, so consultants, to go around, and they call it, I like the term actually, somebody said to me, it's man on a horse or woman on a horse, which I quite like. So they obviously rely on that. Now what's, good about that, obviously you've got experts on the ground, but there is a level of, it's very hard to scale that and move at pace. So, and also it's typically retrospective, and typically there's 8-9 month, maybe 18-month delays when they actually get that data. So therefore, when they've got it, as much as it's useful, it's very hard for them, going back to that insight topic again, it's very hard for the business to then make decisions, because so they're kind of then stockpiling this data. But what I've learned from our customers, they haven't really been able to make decisions on it because it's kind of been retrospective and then things change. Plus, it's not as multi-layered as what the technology provides now. So that's one thing. The other way also, more recently, I mean, which is sort of, I mean, I laugh this, but more in a fun way. I hadn't realised how much data is collected. So, for example, in trading world and insurers in particular, they're using things like TikTok, social media to actually see what's happening on the ground at certain weather patterns. So I know there was a big rush in trades last year when there was some floods in Ethiopia. And, you know, and the same in Eastern Europe, there's been a lot of drought. So they've been using TikTok on the ground to see what happens, which I find fascinating and like quite inventive as well. So you've got all of these different ways of data collecting. And then obviously now compared to what we're doing, I think the thing is that it's scalable because obviously we still have the scientific angle. We still have people that know what's, you know, a very experienced agronomists that understand what goes on with these commodities, with disease and all the other weather and climate. But then we're layering it with all these extra points. So what you can do, it just provides a more useful signal. And obviously a lot faster. Well, we're now in the early days, we were very focused about near time, real time, but you know, our models now have got so good and we've built them up across all the commodities that obviously they're providing very good forecasting. And then that's really the power of that. So, there's business results that come from that, apart, you know, the obvious of big strategic decisions on sourcing sites and investing in these assets or ensuring these assets. But there's also just practical things about it's faster to get the data information to then set up your revenue stream. And it's also more cost effective, you know, and it accelerates the time that you can get your product out to market in a scenario of an insurer, for example. So it's very interesting.
Yeah.
I think how that's evolved.
Speed of data is super important. I will admit I wasn't expecting one of those unconventional methods to be TikTok, and I think that might be the first and last time the words TikTok are said on the Making Risk Flow podcast. But it's super interesting, and it's how news spreads nowadays, right?
I hadn't even thought. I'm not. Yeah, it's amazing. Amazing.
Yeah. Very creative. So for traditionally risk-averse carriers, what's your advice on how to overcome enterprise inertia? I guess in the lens of testing, implementing, and scaling, how can leadership teams experiment keeping the initial operational risk low, yet with enough commitment to actually explore the potential benefit?
Yeah, I think, I mean, you know, rightly so. We all know, sort of from an insurance point of view, we know in carriers, you know, it's fairly risk averse industry. And so I just think the best thing is, you know, try the data. I mean, we provide samples for people to trial it. And I just think people can look at one commodity in one geo or one geography across one product line. And I think then, and, you know, when we look at our signals and the data sets we provide, we obviously, the model performance is very important. The hindcasting is very important. So that's the back testing. So we give 5 years back testing information so people can go through themselves and do all their checks and due diligence. And then alongside that, obviously, we provide the sort of insights that then provides a view of the forecast and where we're going so they can check. And it makes it a very simple way for somebody to actually check utilising that data. And then it's a case of, because I always just think there's no harm in trying these things. If they can give you an edge or give you an additional revenue stream or increase your margins, then why wouldn't you try it at that level? Because there is this, you know, as we've seen from different companies, if we don't do it, this is taking things so someone else will do it. So I think it's very important to try this, but just try it in a way that's not such cost. Do your thorough testing. I mean, we're very open. We sort of, and I know Satora the same. We can provide one of our experts on a call to have a discussion and bring some that, you know, demonstrates the sort of power of the thought leadership that we have in this space and the, and the ability. And therefore, then I think it makes it a bit of a no-brainer. And then obviously people can decide as a business if they want to expand it.
Absolutely. There's a lot of dimensions to what you just said, but I think one that stands out is kind of calling back to that human relationship piece. How do you identify partners that are going to work with you early on to understand the scope of benefit for you, deploy that test, and then kind of really measure that so you've got a much clearer idea of what it's going to look like in practice versus just a POC or a phase one or something like that?
Yeah, exactly. And I think it's faster. I mean, time's precious, isn't it, for everyone? So I sort of think, especially insurance, it's it can be a hard business at times. And I think that it's important for us. We try to be as efficient as possible to give people the best access so that they can do their own checks and balances. And also then it starts, the building of what hopefully is always then a long-term, fruitful and successful relationship. And for me, that's key.
Yeah. And I mean, we totally agree with you. The insurers that we work with, we feel we have very close relationships with. The teams that work together get on really well. They kind of understand what each other's goals are and approaches might be. It does really become a symbiotic relationship, I think.
Yeah, agree.
I've got one more question for you today. It's a bit of a fun one that we always end on. And it's always interesting for someone that has perhaps come from outside of insurance. So if you could change one thing about the insurance industry, what would that one thing be and why?
Oh, you've got me. I don't know if I'll be original when I say I'll just speed up. And I would say that as both somebody that has worked in implementations in insurance, as a customer of insurance companies, and also as somebody that's sort of interacted and partnered with insurance companies. I think the insurance industry is an amazing industry. I think it's a real networked industry with people that are hugely knowledgeable, very bright, and really know the space. And I think it's also a very nice network of people that I've interacted and operated with. But it's been a consistent theme throughout my 20 plus years of experience about the lag that it takes. And sometimes I think a little bit of pace could actually probably help the insurance industry grow to be even bigger, and also probably give them a bit of an edge on margins.
Totally agree. I think many of them are feeling that themselves. There's a desire to move more quickly, and there's obviously obstacles in their way. But one of the benefits of LLMs and AI is not just the output; it's the speed at which the output can be realized. And I think we're seeing that now. And yeah, totally agreed. And hopefully, it's something that can be blueprinted and scaled across insurance.
Yeah. Definitely excited for that. And I've definitely seen, we've seen a lot of, there has been a lot of innovation in the insurance space, isn't there, around different things. And I just think, when they've done that, it's created, I think, so much opportunity. So yeah, it's very good to hear that.
Mm-hmm.
I'm very
Caroline, it's been great. It's been great hearing your kind of insights, hearing about Treefera. Some of the tree puns were very enjoyable as well. So that's been great. Thanks so much for joining us, and all the best.
Jake, real pleasure. Thank you so much for having me.
Thanks, Caroline.
Enjoyed it. Cheers.
Cheers.